China is making a move. It is quietly pulling back from its vast holdings of US debt. For years, China has been the biggest buyer of US Treasury bonds. These bonds have helped to finance America's massive spending. China's appetite for US debt has been waning. In recent months, it has significantly reduced its holdings. In the first quarter, Beijing got rid of debt securities of the US Treasury and other government agencies in the amount of $53.3 billion. This shift signals a potential turning point in the global balance of financial power. It reflects a growing concern in Beijing about the stability of the US dollar. Reducing reliance on the dollar is a key lever for China to gain leverage in this power struggle. It is a high-stakes game with potentially far-reaching consequences for the global economy. To understand the significance of China's move, we need to zoom out. The world is awash in debt. Governments borrow heavily to fund their operations. The United States, with its enormous budget deficits, is the world's largest debtor. Its debt is largely held by foreign countries, particularly China. The US dollar's role as the world's reserve currency has given America an enviable advantage. It can borrow cheaply and extensively. However, this system has its critics. They argue that it gives the US an unfair advantage and allows it to live beyond its means. This dependence on foreign lenders puts the US in a vulnerable position, especially in times of geopolitical tension. China's motivations for reducing its US debt holdings are multifaceted. The country's economic landscape is changing. It is shifting away from export-led growth towards domestic consumption. This means China needs fewer dollars to finance its trade. Over the course of a year, the reduction in Beijing's investments in US government debt looks impressive. If in March 2023, the reserves of the People's Bank of China contained US debt securities in the amount of $869 billion. Then, by the end of March of this year, it was already $767 billion. At the same time, China is actively promoting the use of its own currency, the yuan, in international trade. The growing strategic partnership between China and Russia is another crucial factor. The two countries are increasingly conducting bilateral trade in their own currencies. This bypasses the US dollar and reduces their exposure to potential US sanctions. This shift away from the dollar is a strategic gamble for China. However, China is steadily laying the groundwork for a more multipolar financial world. Section 4. Ripples in the global pond. The implications of China's move. China's decision to reduce its US debt holdings has sent ripples across the global financial system. The immediate impact may be subtle, but the long-term consequences could be substantial. This is why the EU, UK, Japan, and Canada continue to buy more US debt, apparently playing along with the US. For the United States, the most direct effect would be an increase in borrowing costs. This is because reduced demand for US debt could lead to higher interest rates. Higher interest rates would ripple through the US economy, making it more expensive for businesses to invest and for consumers to borrow. This could potentially dampen economic growth. For other countries heavily invested in US debt, China's move serves as a warning. It underscores the potential risks of relying too heavily on a single currency and highlights the need for diversification. Section 5. A debt dilemma for the world. Navigating the new landscape. The global economy is facing a debt dilemma. The US, despite its economic might, is heavily indebted. Its reliance on foreign lenders, particularly China, has raised concerns about its long-term financial stability. The United States no longer hides the fact that the prosperity of China is a threat to the American economy. China, on the other hand, is strategically reducing its exposure to US debt. It is simultaneously seeking to increase the global influence of its own currency. Countries with large dollar reserves will need to adapt to a world where the dollar may no longer reign supreme. They will need to diversify their reserves and explore alternative currencies for trade and investment. This could accelerate the emergence of regional currency blocks and reduce reliance on the US dollar. The shift away from a US-centric financial system could lead to a more multipolar world. Section 6. The future of finance towards a multipolar world. China's move away from US debt is a harbinger of change. It signals a potential shift in the global balance of financial power. While the dollar remains the world's dominant reserve currency, its supremacy is being challenged. China's growing economic might, and its strategic efforts to internationalize the yuan are reshaping the global financial landscape. The future of finance is likely to be more multipolar. The US dollar will continue to play a major role. However, other currencies such as the euro and the yuan are likely to gain greater prominence. This shift will be driven by a complex interplay of economic, political, and technological factors. It will have profound implications for global trade, investment, and geopolitics. The transition to a multipolar financial system will not be without its challenges.